Hello and welcome to Crypto Weeklies. Today we are going to talk about Internet Computer ICP and it conduct its machine learning based price forecast, regression analysis as well as accumulation strategy. None of the content is financial advice. Right now the price of ICP is at around $8. By market cap the token is at 23rd position. Market cap is at slightly under $4 billion. Over the last 7 days rallied by about 2%, up by about 1.5% over the last 24 hours. And now let's take a deep dive about the price forecast. This is the machine learning based algorithm trend on ICP's price starting 2021 May, when the token was launched in the middle of the bull market, and then ever since that point till about September 2023 the price has been was in down only mode. Since September 2023, when the crypto market started finally picking up pace, ICP did rally from $3 to at one point a 6x rally to about $18. From March of 2024, amid the wider crypto correction, ICP also saw a correction to about $7.5 at one point. Per this machine learning based model, if the trend were to continue, that is the base case scenario for the forecast till about January 2025, the range is between $6 to about $7.5. That is without any bullish surge or any bearish surge, just following the historical trend. On the other hand, if the market rallies towards the last quarter of the year, and then in that scenario the price could see a one standard deviation bull case between $8.5 essentially till about $12.5. That's the forecast, and this is you can see our model does consider week by week ceiling in yellow and floor in green, and the pink is the base case scenario. The floor for the remainder of the year is between $4 and about $7. And if you are interested in week by week valuation, the base case is in this middle column. To its left are the 3 bear case, to its right are the 3 bull cases with 1 standard deviation, 2 standard deviation, 3 standard deviation accuracy. The 2 standard deviation model right now says that the price can between now and the end of the year that the price can be within $9.5 and $30. That is at around 95% confidence. The model says that the price will stay between $9.5 and $30 if there were any rally. Those would be the ceiling values. With 70% confidence, the model says between $8.5 and $12.5. And with 99.7% confidence, the price is again these scenarios usually occur in the middle of a bull market. For now we can focus on the bull case scenario and at 70% and 95%, as well as the base case, to provide some assistance to where the price action could see itself in the next 3 to 4 months. Now that we have covered the forecast model, we can take a deep dive on the regression based analysis for ICP and spend some time on this. The key idea with this polynomial regression analysis is that there are phases of the market where the price goes down with time, and there are phases of the market where the price goes up with time, and these phases can be identified by using polynomial regression function, which is not too loosely fit or too tightly fit, with providing sufficient degrees of freedom. This is the polynomial regression model. Per this model, the fair value again in pink. To top on its top are the 3 standard deviation bull cases, and to its bottom are the 3 standard deviation bear cases. The key idea that we have seen so far is that whenever the price, at least in 2023, the price did have a strong bottoming pattern when the price reached its 2 standard deviation undervaluation. In 2024, that has shifted to 1 standard deviation undervaluation. In 2024, the price visited this 1 standard deviation band twice, in July and in August. And those were the buy zones. Back then the price was slightly less than $7, and at one point at around slightly under $6.90. Per this model, the phase that we are the ICP token is in right now is since March of 2024 it has been in a declining price mode. Now, per this analysis, the fair value is at around $8.73. So if the current price rallies by about 73 cents, then the price essentially will meet the fair value. And and this model, also the polynomial regression model, also takes into the recent price into consideration. Once when and if the price begins to rally significantly, the shape of the regression function can also change. The one standard deviation ceiling at this point is at around $12, again very close to the AI based or machine learning based forecast at one standard deviation accuracy at around $12. The two standard deviation ceiling, which ICP did hit in 2023 during March of 2023, that valuation has come down at around from $18 to about $16.40. So those are the key levels to watch to the upside. To the downside, if the price goes back to $6.37, that's again a good buy zone for ICP. Again, not financial advice. The three accumulation based models, I'll spend more time today on the time weighted average price based model to highlight how ICP has essentially been in a buy zone ever since the token launch, because the price has always had a downward slope. That's why it's key to know that although these models flash this buy signal, that doesn't mean that the token won't stop crashing if there is a macro narrative. Nonetheless, right now the time weighted average price points to a key level again at around $19. So if the prices were to rally at around $19, they will face significant resistance. They have whenever the price tried to rally at around to this blue line, which is the time weighted average price, there was a correction once, and more than once. Once in again 2021 September, and again during the bull run of March 2024, when the price tried to get close to the time weighted average price. Right now that has a downward slope or downward bias at around $19. So that's the first model. Per this model, as the price is lower than the time weighted average price, it's a decent time to get in. The dollar cost average model takes into consideration the price and the proportional difference between the price and the polynomial regression based fair value. Per this model, right now the risk levels are at between 0.1 and 0.2. That means the second best time to dollar cost average. We were in the plum color, or the best time to dollar cost average not too long ago, about 8 to 9 days ago, when the price was at around $7.30. Right now the price is trying to come close to the fair value again at around between $8.70 to $9. Again, different interpretation at weekly level, and this is a daily based daily granularity model. So slight differences, but again nonetheless the risk level based approach, you can see that the second best time to accumulate could have different implication, as you can see ever since October 2021. The risk levels have been between 0.1 and 0.2 risk. Again, this also solidifies the fact that having a standalone dollar cost average scenario or accumulation strategy without understanding the macro environment would be kind of a foolhardy, especially for a lower cap altcoin. That's why we try to focus on the SMA risk for Bitcoin and ETH, where they both together control about 60 to 80% of the crypto market cap dominance. It's key to understand, rather than focusing on just accumulation strategy for one single crypto, where the overall crypto market is trending, that is normalized between lowest risk to highest risk based on the proportional difference between the price of Bitcoin and ETH with its 20-week moving average respectively. So the orange line is for Bitcoin, the blue line is for ETH, and they together establish what is the normalized risk for the 60 to 80% of the top crypto market, as well as altcoins tend to follow Bitcoin and ETH on the rally. They also provide some evidence to what the altcoins could do. Right now the Bitcoin risk and the ETH risk is also low, between 0.2 and 0.4. This is the low risk band, essentially at 0.28 for BTC and 0.23 for ETH. If you were to compare prior phases when the SMA based risk was low for both Bitcoin and ETH, you would find that occurring in June 2022 as well as June 2021. After these both of these dips, you could see that the market did have a mean reversion or a rally back to the upside. The key idea over here is when the ETH risk goes down and meets the Bitcoin risk, that's when the major bottoms occur. Again, you can see back in June 2021, ETH risk was way up high, BTC risk was way low. That means if Bitcoin crashes more than ETH, that is not a bullish sign for the altcoins. On the other hand, when ETH crashes more than Bitcoin, that usually in the recovery, altcoins also enjoy considerable positive outlook. So this again, with this perspective, you can see right now Bitcoin and ETH are both having a similar risk crashes. That means again, altcoin risk should also be lower now than compared to back in 2021. So this is one of the ways to analyze. The other way is to analyze based on the normalized risk score for the top 100 cryptos between 0 and 1, where the risks are. This is a single snapshot, takes into consideration price risk as well as volatility, alpha, Sharpe ratio based risk, and percent drawdown from their peaks. Comes up with a single score. Right now the risk levels, as you can see, have been going down. This whenever the risk is from this neutral yellow color back to the green color, that's when accumulation again makes more and more sense. So again, with this I would like to leave and hope you enjoyed the content. If you did, please subscribe to the channel, also give this video a like, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.